Hello guys, in this video we'll talk about pull high, pull low, excess high, excess low, single print. For example, from Friday session, we have a selling tail here. When we talk about gap, we always use RH session. From Thursday low here and Friday high here, we have a gap here because price opens below here, so we have a gap here. But buyers failed to fill the gap, and we made a selling excess here. So in this case, we know the upside auction for this day is temporarily finished, and price one timing framing lower to a low level. And when we made a low here, if you watch real time, we make a low here, and this period we made the same low here. We know the downside auction didn't finish, so they pushed lower. They made excess here, trapped seller here, then pushed higher, and seller tried to sell it again and made another pull low here around 41.61, the one tick. So we know we have a poor location sellers. They got trapped and price made a high, but they never closed above the gap or above the A period high, and another poor high here because the high is almost the same. When we talk about poor high or poor low, the difference is within 2 ticks. If it's made more than 3 ticks, so we can say the poor high or poor low is finished, because when one timing framing to end, we need 3 ticks. Here we made a poor low because we can tell the downside auction didn't finish. Here, because we already have excess here, we trapped poor location long, so they liquidated position, and into the end of the day we made an excess here. So we use the 4 p.m. close price. Mostly we ignore this part. This is excess here. When global X open, when price, if the target 41.61, we can see, we can monitor if seller appear again. Let's go to Thursday. Here, because this low is 41.68 and 1 tick. This one is 41.85.5. 3 ticks excess. So the difference between these two low are 3 ticks. It's technically, if it's 2 ticks, it's an excess, but it's not a good excess. For example, here, when you see a long excess here, you can tell the downside auction is finished, then they never come back. And here, poor location long, they get trapped. Then we made excess here, but price never go above. When we talk about single print, single print is the candle from the horizontal candles that don't have overlapping areas from here to this high, from this low to this high. For example, here they have a lot of overlapping area, so it's not a single print. Thursday we don't have much single print. We have a few ticks excess here, but it's not a good excess, not a material excess, like buyers are not clearly getting advanced level. This is poor location sellers, they get trapped. Here we have another single print from this low to this high. This area is single print. If you look at the RH session, they don't have overlapping area. This is how you find single print. And for poor low, it's the same concept. If the low are within 2 ticks, that would be a poor low. If it's more than 3 ticks, we can say it's an excess, but it's not a good excess. For example, here we have excess here. We know it's a good excess. The downside auction is finished for this day, and opens here. This is a single print. From this high to this high is also single print. So below the single print, sellers are in control. You can see the next few days, price never closed above this single print, 42, 43. And Monday is here. We have another pull low here on Monday. We know the downside auction is not finished. We made excess here. So this is a buying. This is a spike above the A period high here. So if the price advertised above this high, you can see buyers are in control. Once on Tuesday, price advertised below this low, and spend a lot of time balance here. We talk about per high, per low, single print, and one timing framing. If the high, each next high is below previous high, is one timing framing down. For one timing framing down to end, we need the price get above 3 ticks above previous high. So if it's one timing framing up, let's find some case. From here we can see price goes one timing framing up until this period. One time framing up ended, but buyers quickly push the price higher. Then they continue the one timing framing up. From this period, it's going one timing framing down. We can find more example here. For example, here this is June 10th, and this is 8:30. From 9:30, buyers are quickly coming because there's a large long tail. So clearly buyers are in control. Then they pushed higher. Then we made an excess here. This is RTH session all-time high, but we have ETH session all-time high here. Then we had an excess. This high is 42.48. This one is 42.49. 1 tick excess. It's a technical excess, 4 ticks, but it's not a material excess. Like if the tail on the upside is like this, we can say the upside auction is finished. In this case, we can say the upside auction is not finished. That's why we see the here. So even though it's easier to say in hindsight, in real time you have to monitor and keep your risk in control. And here, because we made the high in ETH, also a ETH per high, and in the auction theory, all the high need to be made in RTH. So it should be a battle next week. So we talk about per high, per low, one time frame up, one time frame down, single print. If you have any questions, please comment, like, and subscribe.